Hey guys, I'm Manisha Gupta and on focus today is the crude oil prices which have continued to be very volatile. But the crude oil price volatility is not new. Many of the major wars have been fought for oil. Crude oil impacts economics of the consumer and the producer countries. It impacts input costs, transportation, jet fuels and products like paints to rubbers and much more. So before I talk about the current situation, let's take a step back and I'll start with 1970s. That is when the two major energy crises happened. One was 1973 oil crisis when OPEC embargoed oil to Western Europe, US for supporting Israel. Arab states led by Egypt, Syria had attacked Israel and the support from US and UK to them, there was an embargo from OPEC. The other was the 1979 energy crisis when prices doubled due to Iran revolution. Fast forward to 1980 and the oil glut by non-OPEC countries like the US and UK led the prices to decline. It was in 1983 that NYMEX launched oil futures contracts to trade derivatives and the speculative activity increased and funds and traders became part of the community and a part of the volatility that crude prices also throw across. It was in 1985 that OPEC added to the glut and increased oil supplies, leading to the lowest prices in 2 decades. And then in 1988, when ICE also launched crude futures, so now we had two major varieties of crude trading in the global markets. 1990 brought with it the prices at $65 a barrel on the back of Persian Gulf Crisis and war, but not for long as it was followed by global recession and the prices hit a low of $15 a barrel. Fast forward to 2001 and September 11 attacks and prices surged to $45. The volatility continued with the prices on 2003 May 8th hit a low at $26. It was in 2007 that the China and India demand growth was the best in the world with prices hitting highs above $50 a barrel. In 2008 July, when the crude hit an all-time highs of $147 a barrel, it was a record and it hasn't been beaten until time. But the volatility is the name of the game. And in the same year, in 2008, after hitting 147 of an all-time high, by the month of December, crude prices fell to $30 a barrel as financial crisis of 2007 and 8 took hold. It was by 2009 that the crisis began to recede and the prices jumped from $30 to $80 a barrel. So you see, it has been very volatile for the crude prices all the times. In 2011, geopolitics and politics take over and Brent hits $100 for the first time since 2008. Briefly though, as Egypt protests led to Suez Canal closure, which is an important waterways. Between 2011 and 13, the prices were consolidating within a higher range of 90 to 120 a barrel. And then in 2014 came the US shale oil. The production rose, taking the US production higher than even Russia and Saudi Arabia, the conventional oil producers. In 2015, you saw the crude prices fall below 50 due to higher US production and as the Chinese economy hit lowest growth in a generation. By 2018, OPEC emerged as the cartel that could move the global prices. OPEC controlled 72% of total world proved oil reserves and 41% of global supplies, and the numbers continue to hold like there even now. In 2018 also, in June, OPEC cut the production, leading to the prices surging to a 4-year highs. And it was in the same year, in 2018, in the month of November, that EIA announced that US is now the world's leading oil producer with 11.3 million barrels per day. So from a net importer to a next exporter is what we saw US emerging as. 2020 was a difficult year. You had COVID-19 and that led to a recession among stock markets, and it also was about Russia and Saudi Arabia price war. The demand fell in 2020 by nearly 4.5 million barrels below the forecast. The prices at one point in time turned negative by $37 on inadequate storage capacity. 2021 also brought with it the Persian Gulf Crisis. It was the use of drones to attack Saudi oil infrastructure as well, which took the prices on the higher side. So from a negative $37 in 2020, 2021 actually was the year of positive crude prices. By the current year, 2022, we have a high of $139 a barrel that we've seen. Russia-Ukraine war is the major reason for that. The kind of supply disruptions markets are looking at, the sanctions by various countries and self-sanctions as well has been supportive for the crude prices and where they are. And then it also has been about very strong demand that the markets are looking at, under investments, all of that supporting crude prices with expectations that we could be trading around $100 a barrel for the rest of 2022.